Welcome back to GoldSeek TV. I'm joined here today with the president and CEO of Fortuna Silver, Jorge Ganoza. Thank you for joining us.
Yeah, a pleasure to be here again.
It's been some months before we last spoke, and since then, Fortuna's had quite a few updates, among that being a very positive quarterly production number with the full quarter of Séguéla now contributing to the underlying production numbers. And I think the numbers was just about 138,000 gold equivalent ounces for the quarter. So just a huge boost and increase from the prior quarter. So if you could talk about more about how things are shaping up with the gold mine, with mine number 5 now contributing to Fortuna.
Yes, we've been telegraphing to our shareholders and investors throughout the construction process, into the commissioning of the Séguéla mine and into the ramp up, how things been going. We published an early news release in early September with the outcome of the performance test that was carried in the month of August, where we indicated that, since first gold pour in late May to August, the mine was really not only meeting but exceeding nameplate capacity. So come September, we to the end of September, early October, we published our production figures, consolidated production figures, and with the first full quarter contribution of Séguéla to production results, we delivered 128,000 ounces of gold and 94,000 ounces of, that's 128,000 gold equivalent and 94,000 ounces of gold. With respect to gold equivalents, compared to the previous quarter, the second quarter of the year, we boosted gold equivalent production by 27%. And with respect to gold only, we boosted gold production by 47%, right? So very significant. We're quite excited about it. And in the fourth quarter, what we're looking forward to now is not just only reporting another full quarter of production, but a quarter where production is going to be more stable. Bear in mind that in the third quarter, we were producing for the full quarter, but production was ramping up, and it peaked in September. But now we're looking into the fourth quarter with more elevated levels of monthly production, right? So we're very excited. This is a flagship asset for the company, right?
And with that, and I could, I guess, extrapolate from this news this week, Fortuna paid down $40 million in debt. I believe that was from the revolving credit line. So this is an indication that the free cash flow for the company is really starting to improve. You're really seeing huge cash flow benefit from this new mine. Is that this is a big contributor, and I would say as a kind of a game changer for the company, because now you're really working with a huge cash flowing mine with Séguéla now on board. So how is this? How does this move and change the company now forward? And does this continue with the debt repayments and reducing some of the debt loads and improving the balance sheet?
Yes. Fortuna is not a highly debt leveraged company, right? To put things into perspective, or net debt to EBITDA ratio, which is a common leverage ratio used across industries, it's below 1. It's 0.9 as of the end of the second quarter, right? So we don't have a high level of debt compared to the size of our business. But having said that, we do believe that a mining company should be run with a fortress balance sheet and either very low or nil levels of debt, right? So we are moving towards that, and the announcement of this first payment of $40 million against our $240 million facility. So we brought down our bank debt from about 240 to 200, and our net cash debt position is down now to 133 million. No, we have a net debt position of about 133 million, which is very manageable for a company of our size, and we intend to take down and become cash positive, right? Net cash positive. But the main takeaway is not only the fact that we are getting strong free cash flow coming from our new mine, it's also the fact that capital demands come down as well. So there is a compounded effect. We are not only generating more cash, but also our capital demands come down as the construction is over, right? So we're seeing the benefit of those two things: increased cash flow and reduced capital demands for the second half of the year. Our results are certainly weighted, towards the second half of the year, and we're starting to see that, and we're happy to share with our shareholders and investors in general the strength of the business. We have paid down those 40 million, and with respect to capital allocation, reducing debt is a priority, right?
Well, you have now 5 mines active. You've now passed this threshold. Like you say, your capital expenditures have been lowered. You close on the acquisition of Chester. So you do have a lot of exploration and other development potential. Where will the focus be in the coming quarters and year now that you have quite a bit of a war chest here to go do a lot of development, other work?
Yes, and we come back to the subject of capital allocation, right? So one, we already touched on, reduce debt, right? Second is continue funding or high-value exploration opportunities in the portfolio. Drilling exploration of the newly acquired Diamba Sud project in Senegal through the Chester acquisition is a priority. Continued exploration at Séguéla is a priority. And exploration at 2 of our mines that are running short on life of reserves, Yaramoko and San Jose, is also a priority. So you'll see us increasing our exploration funding towards those high priority targets. With respect to Diamba Sud, for example, we already mobilized very quickly. I mean, we closed the acquisition only a few weeks back, and we already mobilized drill rigs. And I can report to you that our drill rigs are turning at Diamba Sud as we speak. So we're wasting no time, and so that's a big push for us in the second half of the year and into next, right?
Okay. Well, and you've had some recent success at the San Jose mine and project. I noticed there was it looked like a new discovery, a new zone, some really high numbers coming out of that drill. What does that look like?
It's interesting because I interact with shareholders and potential investors all the time, and I was on a marketing trip earlier this week, and I had some interactions with investors who were asking me about the short life of mine at San Jose and Yaramoko and the production profile of the company. And I was pointing to them that when we brought the San Jose mine into production was back in 2011. And back then, we only had 5 years of reserves, and the throughput capacity of the mill was half of what it is today. So fast forward, 12 years, And we have 3 years of reserves, and the mine operates at double the rate than it did. So, exploration is key here, and we are putting the money, and discoveries are never guaranteed, but we are putting the money, and we're starting to get some results finally at San Jose with this newly discovered blind vein we named Yesi. I say blind because it doesn't surface. It does not outcrop. So it was discovered. The discovery came as an outcome of an infill drill program in one of the vein systems that we have identified a few years back, and we decided to extend one of the drill holes. And sure enough, we encountered a vein that surprised us. It was an unsuspected discovery. And our first drill hole caught almost 10 meters of true width at 1.3 kilograms of silver equivalents per ton. So, I mean, an amazing hole. Now, that is an exciting discovery, and we have a couple of holes of that nature. Now, our work is to see if this exciting discovery migrates and moves up into an exciting resource, right? So we're working now to see what's the size dimension of this new zone. So there's still some exploration risk, no doubt, but everything starts with an exciting discovery, and that's perhaps the more difficult one, and we got it. So right now we have 3 drills turning from surface, from underground, working to give dimension to this discovery. Right?
So you're very active in defining this new discovery, trying to understand it.
We're very actively there as we speak. We're very active at the Yaramoko mine, which is also, running short on reserves. There we had a good 2021, 2022 with respect to reserve replacement. We've been able to replace what we consume and roll over the life of mine. Still, if you look at the reserves, it shows about 3 years of mining, right? But if we continue having this kind of success, that mine can continue potentially operating with 3-4 years of reserves ahead of it for a number of years. And that is not unusual for vein type deposits. So those are priorities. We're working hard, deploying capital. Our exploration budget in 2023 was around $28 million. And or is around $28 million. We have expanded that to 31 to cover the drilling that just initiated in Diamba Sud in Senegal. And for 2024, we're looking at a budget probably in the range of $40 million for exploration.
Okay.
So a big push there. We have a lot of high value opportunities in the portfolio, and there is no better value we can bring to our shareholders than a discovery in our portfolio.
Well, the company's moving forward. You've got the 5th mine now coming on. You're adding value through exploration. Your capital needs have fallen. Your cash flow is increasing, but it's not being reflected in the share price, which is a general problem in the sector. So what can the company do to change that? Is there there was a share buyback program? Is that still active? And does the company consider maybe in the coming year some sort of dividend, or what is the company looking at?
So we have talked about the 2 priorities for us on capital allocation. No, we talked about debt repayment. We talked about exploration funding, and last but not least is the 3rd one, which is return to shareholders. So yes, that is a priority. We have a share buyback program in place. We have been quite timid in executing on the share buyback because of the large capital demands, and we were weighing in the capital demands that we still had with the, and securing the funding in our treasury to withstand any kind of unforeseen event, securing the Lindero delivery. But now that that is behind, we re-engage in the discussion of returns. We've been having discussions with various shareholders on trying to gauge their views on returns. Some like a stable dividend, others understanding that this is a capital intensive business, favor more a special dividend rather than a regular dividend payment. Others don't like dividends because of the tax implications, period, and they like better share buybacks when it makes sense. I have to say that for me, from the dividend perspective, a dividend has to be meaningful and sustainable, right? For it to make sense. We see a lot of companies instituting dividends that are not meaningful and are really not sustainable, and I don't favor that, right? So, but in this environment, share buybacks are a strong consideration. We have the share buyback program in place. Because of our credit facility, we couldn't have some limitations on the exercise on the share buyback program that we're working to remove with the banks right now.
Okay.
But yeah, the share buyback program is in place, and we're looking forward to be opportunistic, particularly at these price levels, right? Today, Friday, we're getting a breather on the market, but yeah, right. we would be opportunistic and execute on the share buyback program, absolutely.
Yeah, I wanted to ask you about the gold price weakness, but here we are with the gold price actually surging quite a bit, 40, $50 today. So for a company that produces 28,000 gold equivalent ounces, that's a several $1 million boost that would be in cash flow. I mean, from a couple of weeks ago when the gold price was just getting smashed and people were just had enough, all of a sudden here we are, gold goes right back up. So having watched this gold and silver market for a long time, you're used to these difficult periods, and you've been through some of the good times. So I mean, how do you address investors who seem to be really skittish? Even though the gold price is near record all-time highs, is just not being reflected yet in the sentiment. It seems like a lot of gold bugs and investors are just they're just expecting the gold price to go back down. So it's kind of it's energizing to see the gold price go up. I just think that most of the investors have lost kind of faith that this market can kind of turn around and do well, and they've a lot of them just kind of lost interest in the mining stocks. So you see that reflect in the share prices. So I mean, for someone who is a gold investor, what kind of advice do you give them going through this kind of volatile period? Is it necessary to have proper perspective and look at the bigger picture, and how do you see I guess the mining stocks versus the gold price right now? There seems to be a bit of a disconnection.
Yes, first, I am an investor in the gold space, right? I operate mines. I have my capital attached to the business. My personal capital attached to the business, and I take a long-term view on the investment, and so I am an investor. So I don't fix too much on the short term or even medium term sometimes. Right? The issue is that in our sector we have a lot of speculators, right? A lot of people tell you that they don't invest in mining; they speculate in mining, no? Yeah. And for them, it's a different game. It's timing, and certainly investors and speculators have been put to the test in this market, not only for gold but more so for mining equities, in the precious metals space. We have all been put to the test once again. And, at times like this, you see these discussions emerging on the barbaric relic, if it's still the investment thesis on precious metals is still valid in these modern days and whatnot, right? Negating that gold has been central throughout human history, no? So I believe strongly that gold has a central place in portfolios, particularly at terms of uncertainty, how we're seeing today. Why is gold up today? Well, it's responding to geopolitical uncertainty. Let's see how much staying power this run we're seeing today has, no? But beyond what happens on a day or short term, looking medium long term, I am a long-term investor in precious metals mining, and I have the stomach and the tolerance to navigate the ups and downs. What I want to do is provide our shareholders the best call option possible. And how do I do that? Operating assets like Séguéla that can operate pretty much in any conceivable price environment today, right? At Séguéla, we expect to operate at around 880, sub $1,000 per ounce all in. We still have work to do at some of our other assets, which have been aging, and we are battling with higher costs. But looking at how we manage the portfolio over time, because assets come in and assets go out, whatever, you will see in us a concerted effort to always improve the quality of the asset portfolio, no? And Séguéla speaks to that. But give investors optionality and yeah, I mean, we've input. I remember in 2001 listening in CNBC what seemed to be a very eloquent and outspoken young man saying openly, in CNBC again, that gold was history and that it was more valuable to hold bottled water as a store of value than gold.
Yeah.
And what we saw right after that is one of the most exciting bull runs we've seen in gold history, right? From 2004, 3, all the way to 2011. So
I'm aware that in 2000, early 2000s, when I started to get more into the sector and following it, watching CNBC, it was just tearing gold apart as a barbaric metal. Jim Cramer came on at 350, 360. He said gold will never move higher. Don't even touch it. He had the show with Larry Kudlow. So it's when the mainstream media seems to really start laughing at it, it's a very good contrarian sign.
So yeah, and again, in this marketing trip, I was asked the question, about the gold market and whatnot, and I have some colleagues, peers, CEOs of other precious metals companies that are quite outspoken about gold itself. I don't spend much time talking about gold itself. I rather focus on how can I get it out of the ground cheaply enough. But I was telling the audience there in the meeting I had in Brussels that well, if you're here today, it's because you're somewhat of a contrarian, right? You cannot be in this room today if you don't see yourself as a contrarian. If we are looking at mining equities, discussing gold today, you are a contrarian by definition.
You have to be quite unique to be interested in a beaten down sector, but from a contrarian perspective, that's the time you want to be taking a look at the opportunities.
Absolutely, you have to be a contrarian. If the contrarian view is the backbone of your investment thesis, you're in the right place for sure. And Now, I have to say that again, I am not a specialist market on the gold market. I've been observing it for years, and I read a lot, and I believe I understand a bit. But what I see is that certainly large capital flows, the large money the managed money across the world is not flowing into gold, because when it does, it trickles down to silver and it trickles down to mining equities, right?
Mm-hmm.
Likely what's been supporting the price of gold is central banks over the last couple of years, right? We know that central banks been buying gold at record rates. And we also know that when central banks buy gold, well, they don't buy silver and certainly not mining equities, right? So the price of gold has been probably supported at nominal heights by the central banks, and we are still to see capital flows. And probably that has a lot to do with real rates, right? So this debate on higher for longer, if they can really support it at the Fed or not. And I mean, we can get into a very complex discussion, but you know, probably we're not seeing large capital flows, even though gold is at nominal highs. It's not the large money, managed money around the world flowing into the sector, right?
Yeah, and when that comes, the market tends to move very quickly, and we've seen that in the gold stocks miners, silver miners in the past, that it can be a very quick move.
And when it happens, after years like we've been living through, and we are living right now, what happens is that first, the market cap of the entire precious market sector is very small, you know, because returns are bad for the entire sector. You don't invest in mining, or margins have been squeezed as an industry over the last decade. You know, in 2011, we were largely a silver producer. We were mining at an all-in sustaining cost of around $9 per ounce, $10 per ounce, no? A decade ago. And silver was trading at $30, right? Yeah. So over 3 times margin. That's why you invest in mining. Fast forward 11, 12 years into today, we're today more a precious metals, a gold miner more than a silver miner. But, you know, our all-in sustaining cost, you know, if I project for the year, is in the range of 1,400, 1,450. The average all-in sustaining cost for the global gold mining industry is for $1,400. And we're selling gold, what, at 1,850 today. Yeah. That's what, 20% odd, 30% margin. You don't invest in mining for 30% margin. Yeah. You invest for 3 times margin. Yes. And that is not here yet. We need to see prices move convincingly higher. And, you know, what's going to drive that? Geopolitical tension, like a day today, and you know, economic imbalances. You know, those are the type of things that will come into play at some point.
Well, in the meantime, you continue to build a very strong gold and silver miner, and I've been watching and investing in Fortuna from very early on. So I've seen you, you know, develop San Jose and you know, turn the company in from 2 mines now to 5, and keep growing and developing. So even during the difficult times, I see Fortuna making the investments and looking for the right assets next to bring online. So it's good to see that you do the hard, difficult work, and then when the market comes around, you're all established and ready to, you know, to benefit from those higher prices. And hopefully the sector will see that benefit soon, because it's been a challenge. And thankfully with now with Séguéla, and you have some low cost mines there that you can weather that better than other mining companies. But it will be a nice period for gold and silver investors to see the silver and gold price reflect all the different issues out there and start to bring more benefit to the sector.
Yeah, again, as I said, no, we all been put to the test, or shareholders been put to the test, investors in the sector in general been put to the test. But we focus on what we can control, which is the quality of assets we develop and operating them competitively and providing that call option, I say, for the investor, right? If our thesis on higher prices takes a bit longer to materialize, you have to be calm that the mining company you're invested on can perform throughout the precious metals price cycle, no, and not just at high prices. Right?
Great point. Well, Jorge, we appreciate the update, the insights. Congratulations on an excellent quarter. Love to see the contribution of Séguéla now really kicking on. So I think the coming quarters is going to be reflected in better analysts coverage and ratings. I'm sure they're going to be looking at the company a lot differently now as the cash flow and everything starts to move forward and better. So we'll have to catch up here in the coming months and see how things continue to develop, and look forward to catching up more.
Yes. Look forward to our third quarter financials release, which comes in around November 9th. No, we're looking forward to that, to be able to share with our investors the first quarter where we can show the renewed strength of the business. No? Yeah.
That'll be very interesting to see. Great. Well, thank you, Jorge. Have a great weekend, and catch up with you soon.
Thank you. Take care.